Hey folks, and welcome to I guess I'll call it the rate search with Dan and Alan. So folks, thanks for joining us once again. And then Alan, thanks for coming on board today, buddy.
You bet.
So I had an interesting, I told Alan this a little bit ago, right when he came on. I had an interesting thing happen today. Well, two things, actually. I'm down in Florida, as you guys know. And, hey, I'm still working. I got a lovely wife of 36 years sitting at the beach waiting for me right now. But this morning we got up and we saw one of the the shuttles go up. That was cool. It was like 7:50 in the morning. And then I got an email from Yahoo Finance. And I'm like, okay, is this real? And so I called the lady and she's like, hey, thank you so much for, we've reached out to you several times. I had a conversation with her for about 45 minutes and it was intriguing. And we'll talk about that in the closing bell video. But I just thought it was kind of cool because she asked me, she's like, hey, Dan, with this Lisa Cook thing and the Fed and all that, how's that going to affect rates? And then obviously she asked me a question. So I have to 20 minutes later, I'm like, hey, you still there? So hopefully I taught her a little bit of something. So hopefully you'll see me in Yahoo Finance in the next couple of days. But you're not here for that stuff, folks. You're here for these things over here. So, Alan, you got some interesting news for us. Alan's got, we had a long weekend, and Alan's holding down the fort this week. But yesterday we had a record day in applications. But one of the things he said is what we're getting a lot of requests for is FHA and FHA refinances and FHA cash out, because a lot of people are like 7.25. They've been in the loan for 3-4 years. Now they're like, okay, I got equity. What can I do? So that's those are just some of the things we're here to talk about today. So let's get to it. Let's see if we got any questions out there. Alan, is there anything new on the front that you want to go? Man, you got some sun, didn't you?
I think so. I did some yard work over the weekend, and it's showing right now.
You gotta stop that.
I know.
But folks, if you would, here's where I really need your help is I'm down, like I said, I'm not at my usual office, and so I got a new microphone, and it should be a good microphone. I just need to make sure you guys can hear me. There's no echoes and things like that. I think I set it up correctly, but just if you guys can give us a thumbs up, thumbs down. If you guys are here, you're here for a reason. So ask some questions, but we'd love for you to participate. So Alan, yep. Go through what's some of the common loans you got just in the last couple of days.
Well, we're doing a good amount of rate and term refinances, obviously, but those are probably 50% of the refinances we have, and then the other half are people cashing out, paying off debt. I was looking at one borrower this morning, and he I think was at like 7.25. And an FHA loan, he bought it a few years ago, and he's got a lot of equity already. So he's looking to cash out. I think he's paying off like 30 grand in debt and lowering his rate to, I think it was in the high fives, which was outstanding because his mortgage payment alone was, I think, going down with paying off all the bills. So we're seeing a lot of that. And it seems to be a great time to take advantage of that right now. So I think I reviewed about 8 or 9 proposals yesterday. So it's really starting to pick up, and I couldn't be happier. So,
well, the biggest thing is we called 6.5% rate. Actually, I was saying it at the beginning of the year, but I've been saying it even since last year. Then when tariffs hit, that kind of threw a monkey wrench into everything. Now we're there. So now I'm like, okay, the next, everybody's question is, what do I do? Do I wait? Mm-hmm. It was like kind of, home prices, you're waiting for them to come down, kind of the same thing with rates. Let's let them keep coming down. Heck, a year ago they were 8, now they're 6.5. They're going to go lower, the Fed's going to cut. Well, that's the biggest question people have. But what I want, let's just real quick, I'm going to go over some of the news stuff just briefly. And this is one of the things that Yahoo Finance asked me. They're like, do you see rates coming down substantially from here? Because Trump is saying, he wants the federal funds rate at like 1%. So if that happened, you'd see mortgage rates at 3. And I was the first one to say, I don't want to see mortgage rates at 3. Why? Well, you're going to have home prices just going nuts again, and that'll put more and more people out of the market. So I don't think rates are going to go down that low, but I just want to take a brief skim across today's economic data, because if you're here watching, we want to make you cognizant of what your rate or rate you can qualify today versus maybe what you're getting somewhere else or what you might think you can get, and then watch daily, because we try to come in daily and say, okay, here's what's going on, but like I said, right now mortgage rates, and I'm going to show you, they're flat as a pancake over the last 2 weeks. So here's what the bond market did today, and I'll bore you for a second. Here's what the bond market did today. It was up 11 ticks. So mortgage rates, they eased a little bit, 4 ticks. Okay, so that's, a lot of people, they'll reach out to us, and I want you to understand how rates work. Okay, the rates on the interest rate sheets that we get go in eighths. So this rate is truly 6.5. And then it's 6.1 or 6.625, and then 6.75. So if you're locked in, let's say you're locked in at 6.5, and you're like, this goes down to 6.46. Please don't call me or your broker saying, hey, I want a lower rate. It doesn't work that way. They have to go in like eighth increments. So you have to have a big enough jump over here, to really make this make sense. So what I try to explain to everybody each day is why are these changing? Well, what happened on Friday kind of blew over to Monday, and what happened was a federal judge came out and said the tariffs that Trump put on are illegal. Well, that created chaos, and the reason for that wasn't it just because they're going to go away, it's we might have to refund all the money back. You're talking $170 billion, and they're like, that would be bad. So we would have to go out and now put that much bonds into the market to get that amount of money to refund all this money back to people, because we don't have the money. So I'm like, okay, just let this settle. It's going to go basically get pushed to the Supreme Court. You like it or not, Trump's going to have the Supreme Court on his side, so it's probably going to get pushed out till next year. During that whole time, we'll still be able to collect tariffs. And then once, the federal courts are basically on his side, they'll elect to go his way. I'm not saying it's right or wrong, folks. I'm just telling you what's most likely going to happen. So that's what's going to happen. So the markets, when they've realized, okay, that's what's going to happen yesterday, and that's why I said, just hold tight. Well, this is exactly what happened to the market. We just basically went back to where we were. And if you go to a 5-day chart, it's basically flat. If you go to a 1-month chart, it's flat. Back over here, look at the number, 101.91. We're at 102.17 right now. So this is for a month. Usually you never see that happening. And that's why I said there's no catalyst to really should bring rates down any further. So that's it, buddy. Let's get over to rates. Sorry. All right, so we have somebody on here. Let's just see if we can go over to here. Alan, I can pull up do you have the sifter up? Or you want me to pop up your screen?
Yeah, it's ready if you can pull it up.
All right. Let's go over to that. Alrighty. So here's what we do. Each Wednesday, Alan and I come out, and we have people hopefully putting up their scenario. So if you're looking to buy or if you're looking to refinance, basically the information we need from you is right through here. And then Pelan, I'll answer your question in 1 second. Here's the data that we need from you. Okay, so if you're looking for a rate quote, and this is the same thing that we do if you call us or if you send me an email or you go to our website and ask Dan, because a lot of people they're asking, what's my rate, what's the fees? So here's our slogan: one application, one credit pool, and we're going to compare your loan to over 30 different lenders. What we do is this. Okay, so Alan and I work at a bank that holds a federal license, so we're licensed in all 50 states as well as Puerto Rico. But that bank is also set up with over 30 different other lenders. And the reason why is, why you're here. So when you put in your application, one credit pool, we're going to read these rates. We'll get you approved. And then their biggest job comes now is how can we search like you are? When you're out there, you're like, okay, I'm going to get 4 or 5 different quotes. We're going to get 30 plus right here on the screen. So that's what we come in each week, and we want people to give us your scenario. What are you looking for? And we're going to pop it on the screen. We'll show you here's what the rate is, and it's going to be live. There's nothing we can really hide here. It's basically we're live. So let's get over to it. Hopefully you got that and you know what we were needing from you, but I'm not sure if you had a question like that or you just had just a question. So let's get over to you right here. As a first-time home buyer, is it worth going towards FHA? Hold on, I'll let you answer this, but I've been hearing going through conventional is better because PMI is the long run. You want to take that one?
Yeah, I mean, the answer to that question is really going to come down to your scenario. You know, what programs you qualify for, what your credit score is, what you have available for a down payment. You know, most of the time, people who are first-time home buyers don't have a lot to put down, so it's going to be 3 to 3.5%. Depending on what your income is, a conventional loan might be better. Depending on what your credit score is, an FHA loan might be better. So typically, if you were to work with us, we would give you all options that you qualify for, and then kind of talk about which one's best for you. I would think the FHA would probably have a lower payment, which in most times is the most important thing for first-time home buyers, just because the rates are so much lower. And if you're putting down less than 20%, you're going to have mortgage insurance no matter what program you use, unless you're a VA borrower or a USDA loan. But, and if you're looking the conventional, the long run for mortgage insurance, you're most likely going to refinance any loan you get anyways in the next couple of years. So I really wouldn't put too much thought into that. But FHA is a great program for first-time home buyers. By far the lowest rates out there right now.
Well, then let's do this until we get more and more questions. Let's just go through a scenario. So I'll give you, and what Alan was saying is a lot of what's determined is your credit score, your income, and your debt ratio. Those are the biggest components of this. So if your credit score is below 700, you're most likely your best option's most likely going to be FHA. Now, what a lot of people in your second part of that question is, you have FHA, was about FHA, the PMI. Well, how the PMI works, if, like Alan said, most likely if you're looking to these programs, you're going to put 3 or 3.5% of a down payment. So if you went with a conventional loan, you're probably going to have the PMI on there for 8 to 10 years approximately. If you do that with an FHA loan, you'd have it on there, yes, for the life of the loan. But again, most in history, this goes back in history, most of the time people refinance within 7 years. So that's, so most of the time when people are looking to get into it, you have a lower rate, lower payment, and easier qualifications with FHA, and that's why a lot of people go that route. And then they're really easy to refinance. And we'll go through some scenarios with during the show, if you guys want, on how, if you're looking to refinance an FHA loan or a VA loan, for example, it's simple. You don't need an appraisal. We don't need to re-verify your income. It's basically put in the application. We'll help you with the paperwork. So if you can get a rate that's at least 0.5% lower than you have now, and you haven't missed a payment in the last 12 months, reach out to us. We'll just give you we'll break it down. We'll show you how much it costs you, what rate you can get, what the fees are, what your break-even point is, how much the monthly savings is, and if it works, great. If it doesn't work, we'll put you in our RateWatch system, and then we'll wait for lower rates. So let's go. We got another thing here. Sorry. Do you think a VA loan is worth waiting in the Northeast until? Do you think with a VA loan it's worth waiting in the Northeast until the winter? Not sure if you can. I'm not sure why you would wait for the winter. So if you want to explain that, I'd love to answer the question. So Alan, let's run the scenario like El Pilan said. If you can run, maybe let's do a sub 700 credit score for somebody looking to buy, and we'll just go, we'll look at it going conventional, kind of like we did last week. We looked at conventional, then we looked at home ready, and then we looked at FHA. And then it was kind of amazing because the FHA numbers were just killed every other program.
So this would be FHA with a 660 credit score. Let's say they're buying 300,000, putting down the least, which is 3.5%. Primary residence, single family, 1 unit in Illinois, my hometown. So let's see. FHA, 5.75.
That's with a credit.
Yep.
Wow, that's pretty cool.
And I'm just
So
going to
what we
write
mean,
these down.
yeah, what we mean by this is what you're seeing on the screen right now. There's a lender. Most of these lenders, if you see to the left, you're going to see a lot of lenders' name. You can't access those programs. You'll see at the end of each one of them, it says wholesale. You have to be a bank or a large broker to get set up with any of those companies to get these rates. It's kind of like going to Costco. You have to join and become a member to get those bulk, those overall savings. Well, that's kind of like this is. You have to be a major lender in the industry to be able to kind of intermingle with these other different lenders, and that's what we do. So, many of those companies you can't get there directly as well. So, all right, go ahead from there.
All right, so let's do a regular conventional loan. Let's say you're putting down 3%. Just a regular conventional, and then we'll do home ready next. So let's see what happens there. It's thinking really hard. Okay. It's 6,875. So a little over a point difference. And
here's
one of the
crazy.
things
Here's the crazy thing is every day when we go over rates, like Mortgage News Daily. This is the variance I want people to understand too. Mortgage News Daily that we were just on, that that website, every day I bring it up. Their 30-year fix is saying 6.49. So then this borrower calls. What happens, Alan? They're like, Dan, you just said the rate's 6.49. Why am I getting 6.875?
Right. Well, it's because of the credit score, more than likely.
Yeah. It's there. So there's a lot of things behind the scenes that, pay tribute to these. That's why when I usually go over the rates, I'm like, okay, there's the rate for the day, what it did, what went up and down. So if you were quoted something the day before, just think the up and down is related to your rate, if that makes sense.
One thing to keep in mind, if you're doing conventional, the mortgage insurance can be a lot more than an FHA loan. Like in this situation here, now this might be off a little bit because this system doesn't have all the MI rates in it, but that's $373 a month in MI when it was $132 for FHA, which that's almost criminal to do a conventional loan.
What's the overall difference in the payment?
About $400.
Wow. That's huge.
Yeah, it's a car payment.
And again, this is a first-time home buyer. So if you go with the one program versus the other, but here's where a lot of people miss out though. There's also, if you're working with somebody who might not know exactly what they're doing, Alan, explain the home ready and how just putting in your income could make a huge difference. Yeah.
So if you qualify for a home ready, you get a discounted rate and mortgage insurance. And really what it is it's based on the area. So your income has to be 80% or less than the median income for the area. And that would be something that we have to look up on our side. But it's going to be a big difference in your rate and your mortgage insurance for a conventional loan. So this same person that was getting 6,875 on a conventional loan, let's see what it does for home ready. Okay. Well, the MI didn't change, but that's incorrect on this system. But it went down to like 6.5, 649.
So 3/8 lower.
Right.
The MI didn't move. Usually you can. I think that's the first thing you looked at and said that ain't right.
Yeah, I think it's just the system that's not pulling in accurate MI quotes, but it will be lower for sure.
So that's the same borrower. And this is why I try to come out every day and say, it's not about the rate. Let's make sure that you're in the right program, because you could say, hey, I got to get a conventional loan. You can give me all this stuff. And we run it through and it's like, yeah, that's good. But then we get your income and it's like, whoa, we can get to 3/8 lower. But If you're okay with an FHA loan, we can get you 5.875. And I was talking to actually two realtors. I was out to dinner the other night, and I was talking to two realtors, and they asked me a question, but then I turned it on them. I'm like, why do you guys not like FHA loans? And they're like, well, they had the same stigma as most other people. I don't want that kind of loan. That's for that's for less income. That's for dude. I'd get an FHA loan if my payment's $400 less a month. You're trying to get the money as cheap as you can, and many times people also look at saying, well, in 20 years from now, that rate. Don't worry, 20 years from now. And I don't mean it that way, but if you're good for the next 2-3 years, that's why I always budget. Make sure you have some side cash available and things like that. But if you burden yourself on where you're going to be in 10, 15 years on your house, that's kind of tough. So I'm not saying don't put that into your equation, but don't make a decision today that might, not be, that might not even really take effect, 20 years from now. So hopefully that makes sense. So, okay, so I think we have the reason why on the FHA that they're about the going up in the Northeast. Sorry, the market is horrible in Connecticut. Was thinking it would cool in the winter. The market, you know what? Alan, you do most of the purchases. We don't really get a ton of business in Connecticut in general. But
No.
do you see any fluctuations time of year? I can't really say that. It's not a state we get a ton of business out of that I know of.
Yeah, I mean, in years past, it used to be that you might see more inventory at a certain time, but I think it just with the market the way it is and so few sellers, I don't really know if there's like a real estate season like there was in the past. But I don't really see much difference. I think what this person might be asking. What was the initial question? Yeah, I mean,
getting a VA loan in the winter.
Yeah,
I think it was basically, should I buy in the winter time because the market will cool down? I mean, it's a good, most likely it will slow down and you're also going to have, you're not going to have family members. They're not, if you have you're married, have a wife, kids, or however you want to put where you are, how you are, you're not transitory. A lot of people that are moving are transit, they're because of children or some other job or whatever. But yeah, I think your market's in a good place anyways. When I was bringing up the Yahoo Finance, they said, what markets are doing good and bad? I said, obviously Texas is not doing well, but you get the Northeast, actually they're doing fantastic. And if you look at all the Zillows and everything else, they're not cracking at all. Parts of Florida are, parts of Texas are, parts of Arizona are. Other than that, I mean, the rest of the country is kind of doing okay, but then you have that pocket up there that's doing pretty good. All right, so let's keep going down to some other ones. Let's see what we got. Doing a VA loan, Connecticut. Rate is looking like 6.1. Short sale. Got approved and appraisal above value. You are on track, Buster. Well, give us your details if you want. Rat Pack. You got a VA loan, 6.1, looking like 6.1. Let's see what we can do for you. So if you would, give us your data. Or Alan, if you don't mind, just plug that one into, just swap it over to VA. And I'd say, Rat Pack, they're watching this video. They're pretty savvy, probably financially. So I'm going to say they have a mid 700 credit score. If not
Let's
better.
take a look. VA. We can do a little better.
5.8 with a credit back. So Rat Pack, if your credit score, just for kicks, Alan, can you increase this credit score to 780, and then let's go to like 680. I just want to make sure that, because we're beating them that much. I don't know if it's a small loan, and just stick with what you got. But if it's a pretty big loan, it's going to save you a good amount of money. Let us know, or just we'll give you our emails right after this, and you can give us a call, shoot me an email, Alan an email.
You're looking for what, FICO or a credit score?
Just all over. I was just going to say, how stable is that 5.8?
All right.
With can it get better? Can it get worse? Just so he gets an idea, or they get an idea what's, if I
Yeah, so it's
buy,
780. It's still 5875,
I
but
don't really
let's
think
see
it's
if
gonna.
it's at 680, the credit score.
But this just shows you how there are different products, and we do have a calculator that's almost available for you, and it's really cool. And I'll go over it with you guys before we go. It's going to actually tell you which program you qualify for at the best.
Yeah, so at 680, it would be 6 even.
Okay. So Rat Pack, if you need our assistance, we're more than happy to help you out. I don't know what the fees are, but on that one, you're getting a credit back of how much? At least you're getting a credit back on
Yeah,
those.
1500 there.
Yeah. So fantastic. Okay, let's hold on one second. I think I missed one. Let's see what we got. Hey, Dan, I tried giving the number on your website a call, but wasn't able to get through. I'd love to connect with you when you get a chance. I'm looking to explore my refinance options. You should be able to get through.
This name sounds familiar. We saw a calendar event for this person.
Okay.
She or he
if you
scheduled.
would, just send me an email. My email is right down below. Not sure why. No, if you called after hours, it should have went straight to voicemail. If not, I apologize about that. Just shoot me an email, and I'll get right back to you. I promise. All righty. So I'm glad I didn't miss that one. Let's keep going down through. We got now Josh Hill. Hey, bud. How you doing? Hello there. Let's see, we got, how do you calculate how much house you can afford? Is it more income than credit score? Well, Alan, you want to take that one?
Yeah, so...
sorry, I'm throwing fastballs at you, sorry.
It's most likely going to be more income. What your affordability is based on your debt to income ratio. So what we're going to look at is what your gross monthly income is. That's the figure before any taxes or deductions. And then what your current debts are. They look at your minimum payments that are on your credit report. So car loans, credit card bills, and everything like that. So we add those plus what your mortgage payment will be. And as long as that doesn't typically exceed 50% of your gross monthly income, that's how we can figure out how much you can afford. Now, if your credit score is below like 640, 620, then you have to do an FHA loan. And then that would be, we would have budget around the guidelines for FHA. But it's more based on income than anything else. What do you think?
Like Alan was just showing you too, the biggest thing, your affordability. Well, it comes down to that payment. So to qualify for that payment, how much your income is going to be. Now, to create that payment, we need, how good is your income? How good is your credit? How good is all that? And that's what we did in this calculation right through here. So we're taking all that data and saying, okay, here's the rate you can now get based on the best program we can qualify you for, and then we'll back in your payment. And in most cases, all your debt that's on your credit report plus your proposed mortgage can't exceed 50%. So just take your pay stubs, but you're using gross income. Remember that part, because a lot of times you and I look at it as, okay, it's my net income. I got $500 left after paycheck. That's not. We look at the gross income before all the taxes and everything was taken out. So thanks for the question. Let me show them a calculator, and then we'll come back to this in 1 second. Here's a calculator that we're working on right through here, and this is we're adding to it. Some things that we want to add so you can use this and functionalize with it. Like, a lot of people don't know what their credit scores are. So we'll have a link here where you can get your FICO credit score, the credit score that lenders use. You're going to know your household size. You're going to figure out your gross income, and we're going to have a calculator here. And then it's going to come down here in estimated monthly PITI. Most people don't know what the PITI is, so we'll have a financial calculator here. But the cool thing about this is what you're going to do is you're going to have all this stuff at your disposal. So then you're going to go in here, let's say like this person, just say, okay, I have a 710 credit score, all right? and I'm looking to buy, we'll put this on a $300,000 property. My monthly income is $6,000. I'm looking to put down, let's say $10,000. And down through here, we're going to make this and make it a percentage, so you can come down here and say, okay, it's that's at 3%. Let's just do it this way, so let's do 12,000. So it's going to fit a couple different programs. Okay, 12,000. Household size, and this is where the income calculations and everything come in. But then you got down through here your recurring debts. This is where you'll be able to order your credit report or look at it here, because you're going to need your credit scores and then what debt you have. So basically what you want to know is, what debt do you have on your credit report? We don't care about your cell phone bills and things like that. On your credit report, okay? You're going to take all that and you're going to put it in here. And then you're going to say, well, here's a payment I think I can afford. But we're going to actually have you a calculator here to help you kind of maneuver through this. And then you're going to say, I'm looking to purchase a house. It's going to be my primary home and blah, blah, blah. So that's going to come down here and ask you a little more questions. Now, these questions are going to be based on, like Alan was going through, he put in his zip code. So it's pulling data, that area median income, to say, do you qualify for any of those first-time home buyers or those home buyer programs based on your income? Because there's grant programs, there's discounted rates like Alan just went through. So this one will have a tab where you can actually look it up. And you're going to say, well, yes, is my household income at or below? Yeah, it's at or below. Okay. Is the property? No. So I'm going to put that. No. First time home buyer? Yes, I am. VA eligible? Yeah, I'm VA eligible as well. And then the rest of these are, first time home buyer, how old you are. You might qualify for a reverse loan or something like that. Then we'll have other programs. Now here's where it really comes in. Now it's going to tell you. It's going to say, well, here's all the programs you should qualify for. So make sure when you're getting rates, you get them from all these. Because we just showed you how conventional rate was 6.875. And then when Alan took it over to the Home Ready, it was 6.375. And then we went to FHA, it was 5.875. Well, this is now telling me, well, I should qualify for all those. So now I'm going to go, well, let's say, for example, you didn't for some reason qualify for FHA or whatever. FHA requires 3.5% down. So let's just change this real quick to, what is that, $9,000. That would be 3%. So what's going to happen here is you're going to go down through here. Now it's going to say you don't qualify for FHA because you don't have enough money down. So now you qualify for this one in the Home Ready. So of these, now you know, Home Ready, if you can qualify for that rate's going to be much better than the conventional loan. So that's what we're trying to help you explain. We're trying to give you guys the tools to be able to do this on your own. So, Alan, back to the drawing board, over to you, bud, and then I'll bring up any more questions that we have. So hopefully that's we're working on that behind the scenes to get that available to you guys as soon as we can. Let's see if we got any other things. Thank you. Nice. You betcha. Anything else there? Sent you an email, Dan. Thank you. And I will get right back to you after the show. I promise you on that. Alan, let's go through. You want to run a couple more scenarios? So we did the FHA. Let's do VA. I don't know if you have a VA loan, do you know you can cash out up to 100% of your house's value? Now, I'm not saying that's what you should do, but look at it this way. Here's what I try to explain to some people when they're looking to refinance and they're like, that's a lot of debt I'm just adding on to my house. Well, that's you. What we're trying to do is help you restructure your debt. We're not trying to say go in any more debt. We're just saying, why would you pay a 28% credit card or a 15% credit card or a 10% car loan when you can loop it into a mortgage at 5.9%? And then, it's stretched out over 30 years. Well, don't pay it over 30 years. Make sure you pay it off earlier. So send in a little extra payments, but get yourself back on the budget, because the reason why you got in that much debt is you're living a little too over your lifestyle, or something happened. I get it. So, but sorry for the speech. Go for it, buddy.
Yeah. So this would be a cash out refinance up to 100% with a 680 credit score. VA. It looks like they're in the mid sixes. Let me let this finish. Yeah.
Wow.
6.5. 100% financing. No mortgage insurance for this either.
Wow. That's pretty cool. Got it. What other scenarios? Any other? Well, we didn't do any purchases today, so let's go back here. Let's see how close. So every day when I go into Mortgage News Daily, and that's where we start the rates. Today they have the rate at 6.49. What that truly is that somebody putting down 20% with a 780 credit score. So most people don't have a 780 credit score, and they're not putting down 20%. So let's go with I just had a borrower last night. Actually, I sent the pre-approval just a little bit ago. And they were like, what's my MI if I put down 15%? It was on it was a pretty big loan. It was $60. So let's look at somebody buying a house, like let's say $350,000. And they're looking to put down 5 or 10%. That's probably where most people are right now when they're looking to buy. I would say, is that kind of the realm? Do you have I don't have a lot of people putting down 20%, do you?
No, 10, some 15, mostly 5 at least.
I see 5 to 10.
Yeah, a lot of people want to put down 10, but then they see the difference between 5 and 10, and it's not much, so they rather keep the 5% in their bank account.
And when you get into a new house too, you're going to have things that are like, oh crap. You know what I mean?
Yeah.
It's like, shit, the water heater's leaking, or you always need new towels. You can't do.
A lot of times people first-time home buyers aren't really used to paying the utility bills, so I tell people that too.
Yeah. But
all right,
what you got up there?
10% down, conventional. This is a really good rate, 6.375.
Look at the MI, $74.
Yeah.
So you didn't put down the 10%. So basically the MI, the penalty for not putting down 20%. I hate to say it that way. If you could put down 100%, put down 100%. So obviously the more you put down, the better off you are. But you have to look at things sometimes financially, and you look at this and say, okay, I can keep an extra 5% in my pocket, which is $15,000, and pay $74 extra in PMI, because many times the rate. Do me a favor, what's that rate if they put down 20%? Just interested. 6.375 with 10% down.
I bet it actually is a little bit worse.
That's what I should have wrote down the total of overall payments, because that's a question a lot of people have too. Should I just put down 15%, and save that extra money?
Yeah, look at that. It's an eighth worst.
So the rate's up. So between that, so I'm not saying that's the way to go. These are just different options or different ways kind of to look at the numbers, and that's what we try to explain to you guys. So our headlines, basically what we kind of the main goal that I wanted to go out there is say, folks, rates, they're where we expected them to be, 6.5%. Where I was shocked was the government loans, FHA, VA. They're at 5. They're in the 5s. I didn't think we'd see 5s in any mortgage products anytime soon. So if you're out there, I don't know, when I was even on with the Yahoo people today, I'm sorry to keep saying that, but I'm like, dude, she says, what's the biggest, I'll ask you, Alan, what's the biggest difference today versus, where things were like 10, 15 years ago? In your, there's no right or wrong. It's just, what's your perspective?
In regards to like qualifying for loans, or?
Well, that was her question. Here's what my answer was, and then you can answer it. I'm like, the rate volatility. I never in my, I never saw a rate change like 0.25% or 0.5% in a day, like ever in 30 years. And then all of a sudden you come in on a day and the rates are quarter different, and it's just like, okay, rates are a quarter different today. It would take a year for rates to change 0.25%, 15 years ago.
Yeah, it's similar to gas prices. I mean, one day they're $3.15, the next day they're $3.75 for no apparent reason. It's kind of how it is for mortgages. I mean, I see a swing of a quarter per day sometimes, and that never really happened, ever.
Well, that actually brings us to right where we started, and that's kind of a good way to put it. We started right here. I said, well, folks, over the last month, rates haven't moved. Here's where we were back in, what's this, August 4th. The MBS was 101.91. See the green number there? Today we're at 102.19. What's that? That's a 0.25 in this number here, which is nothing. So over the past month, it's just been stagnant, and I like it. So right now, here's our short-term, our midterm, and our long-term thoughts on all this, folks. So midterm, there is no catalyst to really get us to rates, much below 6.5. So, if rates hit 6.49, folks, and we locked in at 6.5, don't call me and say, Dan, can I get a lower rate? 0.01 doesn't matter. Okay, remember they go in eighth increments. So that's that part. But there's really no catalyst. There's really nothing here yet that should make mortgage rates either go up or down. But that can change on a tweet, folks. So if you'd like some assistance, if you're out there looking to buy, if you want some assistance looking to refinance, we'd love to help you. There's multiple ways to get us. So if you try to call, and unfortunately, I don't know why the phone doesn't go through, there's a bunch of buttons up here. So let's just take you over to our website real quick. At the top right, that's our phone number. It should be working 24/7. And even after the bell, it should go straight to voicemail, and we check them every morning. Right here, if you need me for anything, ask Dan. Just click it, ask me a question, it comes right to me. If I'm out of town or I'm busy or whatever, I usually forward them to Alan to cover for me, because I don't want them just to go stagnant and you not hear from me for a week. It's not a good business plan. You can apply right here. If you want to put in your application, you want to make an appointment. If you're like, hey, I'd love to reach out to you guys and have somebody call me, well, set an appointment right through here. There should be no way that you can't reach me. I'd love to help you. We'd love to help navigate you through. If you're looking to buy, check out this program right through here. This is a program that will give you up to $7,000 if you're looking to purchase a house. It's income-based. It doesn't matter if you're a first-time home buyer or not. Check and see if you qualify. If you're looking to refinance, right through here, there's a refinance tab. Basically, what you're going to tell us is saying, Dan, Alan, when rates hit 6, I'm on a conventional loan, when rates hit 6.25, let me know. I'd like to know, see what the numbers look like. What's the cost? What's the break-even point? Does it make sense? We'll go through it. Let's say you already got rate quotes, and you did what you were supposed to do. Remember the old school, get 4 or 5 rate quotes? Why don't you do this? Check out our system. We're going to compare your loan, one application, one credit pool. We're going to compare your loan in comparison up to 30 different lenders and over 30 different lenders. How do you do it? Just click their loan estimate review right here. Get that best review you have, loan estimate. Make sure you call the loan officer saying, I'm getting one last review. If they beat you, sorry, I'm just going to have to go with them. I know you spent some time with me, but I'm going to have to do this one last thing, and send it over. If we can beat them on fees and rate, love to win you as a customer. If not, I'll be saying, just continue working with the person you're working with. You're in good hands. But that's our show for today. We will be back live, same time, same place next Wednesday. So if you have any concerns, where rates are going from between now and then, please reach out to us. Either me and Alan would love to help you. If not, if you want to check in each week, check it out. But even last week, we were at 6.5, right where I called. We're right there as well this week. So thanks for watching, folks. God bless. Have a fantastic evening.